Okay, Megawhale team, welcome back to the channel. Thanks for tuning into today's video. We're going to take a look at Bitcoin today. Before we go ahead and get started, head down to the pinned comment below. Join our Telegram channel and get access to all of our updates, analysis, a whole range of more information. Right over here, you can see our Telegram channel. If you're interested in VIP channel, you can go ahead and join our VIP. To get access to this, you just go ahead and contact me via the free channel. You can see we do daily updates, market analysis, whole range of trade signals, and a lot more stuff in here, a whole heap of profits for you guys in here. This month alone, I think we've done about 16 trades. We've only had one loss so far. We've got a couple trades still active, but so far we've had huge profits in VIP, which is awesome to see. Let's go ahead and get into Bitcoin. Now, Bitcoin in a short-term time frame, what we're going to focus on today is more or less that short-term. We're going to go a little bit into macro, but not too much. But for now, we're looking at Bitcoin, and Bitcoin has formed two things. Number one, we're forming an ascending wedge, and this ascending wedge we can see over here. It's like a tilted pennant almost. That's kind of what you would imagine an ascending wedge to be. It's almost like a tilted pennant. It's tilted upwards. It's ascending with two trend lines, both rising as they converge. So they're kind of pinching together over time. That's kind of what an ascending wedge is. Now, ascending wedges are inherently bearish patterns, and we do expect this to potentially break to the downside. Now, what we want to talk about is the measured move. With a measured move from ascending wedges, we go ahead and we take the first high to the first low. That is our measured move, all right? That's our measured move difference. We apply that to the breakout point. So say, for example, we break down over here, the measured move would take us to about $20,000, okay? If we break upwards, it would take us over 28, okay? That is how we use the measured move. Now, measured moves provide potential price targets, but what they do not tell you is where the price will actually end up at before it reverses. So it can tell you this is the measure move. This is where we could expect the price to head at a maximum from this breakdown, but it doesn't tell you at what point throughout this range it will stop. Will it stop here? Will it stop here? Will it stop here? That is what we need to apply some technical analysis to find out. So usually measured moves, they do provide you a basis of range, but you have to apply different structures, so diagonals and horizontals, to indicate points of potential reversals. So we'll go ahead and look at the chart. We have a very strong point of contention over here. So if we do break from this pattern, my initial target for that breakdown would be this $20,000 to $21,000 range. We have both support from the uptrending line, which is this line over here, okay, as well as our diagonal line, which you can see there's a zone between here that goes across the entire Bitcoin chart. If I go ahead and zoom out to the daily, you'll be able to see what this diagonal line actually is. We can see it over here. So this diagonal line here has provided a very strong macro support and resistance for Bitcoin, dating back to, all the way to the start of 2021. We had, support resistance flips along this area for a very long time, even extending all the way into, mid to late 2022. And more recently in July 2022. It's been a very strong zone of potential price slipping. Generally, when we're above this zone, we expect more uptrend. When we're below this zone, we do expect us to be in a little bit more of a downtrend. We've seen that twice. We saw this over here, which was that bottom per se in June, July 2021, okay? And again, we saw a very similar thing here when we were at the bottom again for 2022. Now, will this hold? That's another story. That's another question for another day. We're not going to go ahead and go into too much of that today. We've kind of already covered that a lot already. But for the sake of this video, we're just going to assume that this was the bottom, and it is the bottom, but for the sake of this video, we're not going to go into too much more detail about that today. So if we do break down, we do expect that trend line to hold that level. Okay, so that's our short-term analysis on that. If we go back to our 6-hour chart, I think we're on the 6-hour chart, we can see we do also have a pennant formation on the RSI. Now, the RSI is a momentum indicator. It will tell us the momentum, and we already know that price follows momentum, okay? Momentum drives price. Momentum, speed, velocity. Those are three massive components of where the price actually goes. So we are looking for a directional break on the RSI here. Obviously, a directional break upwards would confirm that we will move upwards. A directional break downwards will confirm that we will move downwards. We're watching out for fake outs here. Very unlikely we get a fake out this far into the pattern though. Generally, fake outs occur in the middle or start of these market structures. They don't generally occur near the apex or conversion point within macro structures or just market structures in general. If you do get fake outs, they're usually in the middle or near to the beginning rather than the end. That is what's a more common probability. So let's talk about this horizontal support zone. We have flipped the horizontal support zone, which is a good thing. We're over the 300 on the 6 hour, obviously over the 200. If we go ahead and go to larger time frames, we can see in the 12 hour, the 200 is still acting as a bit of resistance over here. We've had some small candles over here, which isn't great. Obviously, we had a doji candle over here, which isn't the best sign. Obviously, on the daily, we also had that gravestone doji. But once again, the gravestone doji quickly got wrecked because we had that massive support zone over here. And I think it's really important when you talk about candles. I had one of my members ask me, Megawhale, we had a gravestone doji, but we didn't continue downwards. Why is that? Well, the simple answer to that is candlesticks don't confirm movements, okay? They only hint towards possible movements. It's a very big difference, okay? So when you have breakouts from certain horizontal levels or macro structures or market structures, they usually confirm levels. But candlesticks, what they do is they provide a little bit of data that you can use in conjunction with all your other information to validate certain moves. So the gravestone doji signified during that particular period, there was an increase in selling pressure significant enough to not only bring the price down after that strong bullish movement upwards, but to overpower that bullish buying pressure within that period. That generally signals that it can translate to the next period and that bullish strength can continue, but it doesn't confirm it. There's no confirmation, it only signals it. And it signals it to continue to the next support. So the next support in this instance was literally right underneath us. So even that bearish strength, we didn't have enough of that bearish momentum as confirmed by the RSI to push downwards, even though we went into that period. We started this period with some bearish strength. Okay, we ended up pushing upwards. Now we've pushed upwards, we reached the top of this wedge again. We're probably going to get rejected. This candle isn't an ideal candle. It's not an ideal candle we want to print. Similar to that gravestone doji, it is showing that bears are gaining control at this price range within that period in comparison to the last period. So bulls are definitely losing strength here as we're reaching a resistance. That is kind of how we use candlesticks. We're almost narrating a story, coming up with like a story of how the price is moving. And then based on that story, we can kind of determine, what could happen next, applying all of our indicators, all of our structures, all of our knowledge, all of our macro trends to help aid us in the potential price direction. So what the chart is telling me right now is probably not the best time to be looking for a Bitcoin entry. And I've been saying it for a long time. A lot of my members and a lot of you followers, guys, a lot of all you guys here, you already know that we bought Bitcoin down here. We were warning you for months. We're warning for a very, very long time. This is going to be the bottom. We're looking to buy here. Many of you followed, which is phenomenal. A lot of people still were a little bit scared, maybe didn't have the risk tolerance, maybe weren't paying too much attention and didn't enter. And they're now asking, Megawhale, when should I buy Bitcoin? When is the next good time to buy Bitcoin? Is it now? Is it now? And the answer is no. No, now is not the best time to buy Bitcoin. Again, if you missed out on that first accumulation, now is not the second accumulation. The second accumulation will come. I'll let everyone know. I'm still working on that. At the moment. But the second accumulation will definitely not occur when we're so close to this resistance. And you think about this, right, guys? Think about this. The lower we are in this channel, the better our risk reward is. Okay. Really good entries along the bottom of this channel. The higher we get up through this midline, up to this resistance, the higher likelihood we have of rejecting. All right. Why would you be looking for entries as we come close to a downward macro resistance? It's not a smart idea. Even if we break through, that is when you'll be looking to accumulate Bitcoin again, when you have that confirmation of a breakout. Because right now, your risk reward ratio for the short term, we're not talking about the macro. If you got no time horizon, you're happy to hold Bitcoin for 5 years or whatever, go ahead and buy whenever. It doesn't matter. But for the sake of, trading wise, if you're looking to trade, hold it for, the next cycle maybe, or hold it for the next few weeks or months or whatever, right now would not be the ideal time to buy. Because yes, although we do expect 18K to be the bottom, okay, we have already talked about the possibility of a potential retracement back down, to 20,000. We talked about that at the start of the video. And we've also talked about, I think it was that, where's my drawing indicator? It was that fractal we showed you, which was that 2020, 2019 fractal or 2018 fractal, I can't remember quite exactly, that showed you how we could potentially come back down, retest that 20,000 zone as we showed you at the start of the video, and then finally make that explosive move upwards, potentially breaking through that diagonal trend line again. Now, all of these are hypothetical scenarios, all of these are possibilities. We do have to be aware of every possibility when we are trading. Right now, what we know to be absolutes are, number one, right now, the bottom is in. The bottom is in until it is proven not to be in. It is proven not to be in when we lose this level again. When we make a new low, then it is no longer in, okay? Number two, the current range we are on is 22,800 to 23,800 is currently major support. That is absolute, that is a known. Number three, we are still in a macro bear market. Number four, the downward diagonal resistance is still the major trigger for a confirmation of the next major move upwards, okay? And if we go ahead and zoom out even further to the 3-day chart, we do have our macro descending RSI resistance, which is this line over here that we do need to break out of. Oh, I think we've already broken out of it. Let's take a look. Well, there we go, guys. We've already broken out of it. I haven't looked at this for a few days. That is good news. We have actually just broken out of this. So this is really, really positive for the market. I'd say this is a really bullish thing. Honestly, didn't even realize we haven't looked at this chart since 2 days ago. So I didn't even realize we did that. But there you go. We have broken out of our macro descending resistance. And this was going to be our falling wedge. If you remember back to our videos, this was our falling wedge over here. What I would like to see, however, although we're broken out on the 3-day, we are kind of looking at this level on the weekly. And the weekly, we still have not quite broken out of this level. If we go ahead and adjust that to the weekly, we still haven't broken out of this level yet on the weekly. That is still our falling wedge over here. Okay, we still haven't broken on the weekly. We do have 22 hours and 23 minutes until we get the weekly close above this zone. A weekly close above this zone will confirm this zone as major support, and then that would obviously potentially trigger that move upwards. Needless to say, guys, overall, we have a lot of support below us. We are much more bullish than bearish. These short-term pullbacks will get eaten up unless we lose this level. If we lose this level, we head down here. Until then, remain cautious, continue to trade, continue to scalp. The market is looking more favorable, it's looking more healthy, it's looking better. It is still in a period of uncertainty, and the closer we get to that upper resistance, the closer we get to this downward trending resistance, the more uncertain the price is going to look, because the more overextended it will look until we break out and get these significant rallies back upwards, okay? So long as we have these slow climbs upwards, the technical indicators are going to start to signal a lot of oversold, a lot of overbought indicators. It's going to start to signal, you know, it's overextended, it's natural. That's what lagging indicators do, okay? Until we get these explosive rallies, potentially some small retracements to reset those indicators and break through again, it's going to look a little bit hesitant. A lot of people are going to be screaming gloom and doom, but in reality, it's a little bit different to what the technical indicators are showing. You have to use a bit of foresight to predict what they're going to look like in the next period, okay? That is it for me today, guys. I'm going to leave it there. I hope you enjoyed the video. Let me know down below if there's anything I can do to improve these videos. If you want more of something, less of something, you want them to be shorter, want them to be longer, I don't know, whatever you guys want, let me know. Obviously, I do these videos for you guys. At the end of the day, I want to make it the best place in YouTube for all technical analysis, market analysis, charts. That's really my goal over here, to make sure everyone's getting, you know, objective, unbiased, realistic, and actual information from a real trader, not these moon boys, not these influencers who are pump and dump their bags on you guys to make money off you guys. I'm here telling you guys what the charts are saying, being honest, being realistic. That is my goal. That is what you're going to expect from me always. And I'll catch you guys tomorrow, probably. Yeah, tomorrow for another video, okay? Hope everyone has a great day, and I'll see you guys then. Cheers. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one. Okay, guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that.